Hi traders, you're welcome back once again to the Bullish Bear FX Academy. My name is Tim Legend and I'm super excited having you all here today on this one. So you're welcome back once again to the 2024/2025 trading syllabus. Here in this channel, our goal is to teach you a whole lot you need to know and probably everything you need to know about trading from start to finish till you become a professional in this. And the goal is we want to take you guys step by step until we make sure that you are good in the trading industry. So what you want to do in case it is your first time here is to hit the subscribe button, turn the notification bell on, and please, as a way to show the support and as a way to show that indeed you appreciate our efforts and what we're doing in this channel, make sure to hit the like button. And at the course of the video, if you have any question, please do not hesitate to drop them on the comment section, because based on your question, I will understand where you need more explanation and know how to teach you more even in subsequent videos. All right, so make sure you engage in the comment section. So let's get into the main video.
On the 4-hour time frame is actually a bearish engulfing pattern on the 2-hour time frame. So you guys can see what I mean. Okay, let's go. How wish we had 3-hour time frame so it would be easier to see it much more better. You can see that a bearish engulfing pattern on a lower time frame suddenly turned to this. You can see it, guys. All right, so that's to tell you that a bearish engulf pattern on a lower time frame is the same thing as what you see here on a higher time frame. Okay, it's the same thing as what you're seeing here on a higher time frame. And when you want to judge the strength of the market, you always want to judge the strength of the market based on higher time frames. So if you're seeing this kind of candles, all right, that is proving a very strong momentum on a higher time frame, it gives you an edge that things are going to happen whenever price gets to that level. That's why you can see that the moment this bulls pushed up to that same level, there's a strong rejection, because that candle is very strong bearish rejection. All right, so it is different. So when you see an ordinary bearish candle like this, and when you see this one, just put it at the back of your mind that this one is much more stronger than this guy, because this guy is just like someone that broke a door when there's no one behind it. But this guy added more force. That when I say more force, I mean more money. Right, in the market here, more money to push more liquidity. They use more money to push this price to this level. Okay, so you need to understand that logic concerning candlesticks. So not all candlestick you see and you say is a strong one, is a strong one. No, there are things you have to check out for to know the one that is truly a strong candlestick and one that is not a strong candlestick. Okay, so 5 important candlestick principles that you must know. Number 1, not all candlesticks are the same. Number 2, the wicks. Some wicks are used to note the length and the strength and the weakness of the candle. All right, that's 2A. Okay, we have 2B, the size of the body, its color. For some candlesticks, wicks are more important, while for other group of candlesticks, body is more important. Okay, so there are some candlesticks you would see and you want to check out the wick, and there's some candlestick you want to check out more of the body. Okay, for instance, when you see this candlestick, you want to observe more of the wick, because what you want to see is how long is the wick. It gives you an idea of how strong the bear is really rejected there. Okay, yeah, so there's some candlestick you want to check out concerning their wicks. Okay, now number 3, the strength. Candlesticks tells you the strength. It's important to take note of the strength of a candlestick before taking trades. So it's important for you to know the candlestick I'm seeing. Is it a strong candlestick? All right. Just like I've told you guys, the difference between this candlestick and a normal bearish candlestick. I'm telling you that this one is even more stronger than this one, in the sense that if you're looking forward to selling from a resistant level and you saw this guy at resistance, all right, this guy, if you see this guy at resistance, you're more sure to take this guy straight than when you see this guy. Okay, so have that at the back of your mind that candlestick also you need to always check out the strength of it. Now, candlesticks also, importance of candlestick principles, false signals. Candlestick helps you spot out false signals. Right? It says spotting false signals will prevent you from entering into bad or fake trade moves. So you can also use candlesticks to check out false signals. For instance, the same thing I just explained to you guys. Maybe you're looking forward to sell and you saw this candlestick at resistance. It could be giving you a false signal. All right, it could be that the bulls might likely still take power because it's not a full-time strong candle. Okay, for instance, let me tell you something. Let's say you're waiting for an entry at resistance. Yeah. Okay, you're waiting for an entry at resistance. If you see what's it called? How do I put it? If you see a red candle at your resistance, okay, if you see a red candle at your resistance, and then you observe that before this red candle showed up, there was, let's say, there was a green candle. So we'll change this to green. All right, let's say there was a green candle before this guy. All right, so let's say the green candle actually pushed up to your resistance, but that green candle had a wick, a long wick like this. Okay, if the green candle had a long wick like this, and then after it you're seeing this red guy like this, this could be giving you a false signal. Why do I say so? This candle is actually stronger than this candle. Why? Because this tells you that when market opened here, the bears actually showed up. Yes. When the bears showed up, they've pumped money there and they're expecting that their money should go down. But for the bulls to overpower these bears simply means the bulls added more money than the bears. So let's say the bears, when the candlestick opened, let's say the bears added $1,000 to push price down, and then the bulls put $2,000 to push price beyond the open and even high. So if the bulls added $2,000 from that level to push price high, and then when the market closed you saw a bearish candle coming like this could be giving you a false signal, because if the bulls could push to this level with full strength, they could still have the strength to push this one again to even higher. And that is why a false signal can actually be created when people have taken trade. And most times, that's what this market does. They will just act like that. The bulls will just exit from the market for a little while they are taking their profit. The bears are busy going down, and you say, "Oh, bear signal," and you put yourself. The moment you put yourself, the bulls show up again in full force and go even higher. Then collect all the stop loss of all the people that must have placed sales around here. They will take all their stop losses, all the stop losses. So once they take all their stop losses, then maybe they must have exhausted whatever they invested here during this era of pushing this guy. Once they have exhausted it, then the real move begins. That's when you start seeing other red candles coming up. I hope you guys are understanding the logic of how this market moves and how you can easily use candlestick to identify some fake outs in the market. All right, that's how you can easily identify some fake outs in the market. So take note that anytime you see a candlestick like this, you see this strong candlestick before the next one and is red, take note that it could be a fake out. So if you're trading with caution. Okay, now let me give you guys an example. Look here, see what happened here. This market, you can see that when price closed here, okay, it closed here. First of all, the bears pushed, right? Good. The bears pushed down, and the bulls pushed with full force before market closed here. What does that tell you? This candle is very strong. But now, after that, you could see that the bulls, when they even pushed and market closed here, the bulls actually pushed up again because of the full strength in them. and then the bears rejected. The bears rejected, that does not mean the bulls have exited the market. For the bulls to push like this and even push like this, they are actually strong. So these candlesticks are really telling you that, look, be careful of the bulls. All right. So even though I'm seeing this red candle that came out next, I'm still being careful about the bulls. But you can see that what happened next, the bulls showed up full time and kept up pushing higher and higher. So as a trader, some traders will be looking, yeah, this is resistant level, good. Yeah, they will look at this is resistant level. So once I see that trade, I'm placing my sell. But once you're seeing this guy here, you see this candlestick, once you're seeing him around your resistance, be careful of that market, whether it's green or it's red. This is not a time to even check the color of the candle. As long as you saw the wick on the below, all right, as long as the wick is below, proving that it is the bulls that pushed up, be careful at that your resistance zone to place any sell. Be careful. I hope you guys are learning something tonight. Yeah, so be careful when you see those kind of signals at your resistance zone. It's very important. All right, so you need to also understand that this candlestick is different from this one. Okay, you can see this one, there was a rejection below, there was also a rejection above, but this one is about rejection just below. All right, so it's different. When you see this as resistance and you see this as resistance, they are telling you two different things. Okay, so let's forge on. Please make sure if you have questions, you're writing them down. I don't actually admire the fact that after the training class, most traders don't ask questions. Please always ask questions. So jot down your questions so that we could have an interactive class after the training. All right. False signals, like I just said, you can always use candlestick to identify false signals. Confirmations, you can always use you can always get multiple confirmations before taking trades. Don't just rely on candlesticks alone. Okay, so always check out for more confirmations before doing what? Taking your trades. So now let's look at candlestick context. Okay, I've talked about that yesterday. Yeah, I talked about that yesterday already, so there wouldn't be need to talk much about it. Where I talked about location. Okay, market context talks about seeing the candlestick on the right location. All right, it is an error for you to see a bearish engulfing pattern at support. It's a big time error. I hope you guys understand me. It's a big time error. For instance, look here. Let's say, I love the fact that I just saw a clear example to show you guys. This is, all right, this is resistance. All right, that's finally turned support. But look here, we are seeing bearish engulfing pattern. This is not a bearish engulfing pattern. This candle and this candle. It's a bearish engulfing pattern. But what is it doing as support? And you can see that when it got to support, the bulls, even though the bulls were weak, yeah, they still try their best to push. And listen, and as they are pushing with their best, they are still taking people's stop loss. A lot of people must have placed sell here. Oh, yeah? A lot of people must have placed their sell here. Oh, bearish engulfing pattern. Wow. Come on, let's sell. And they place sell here. Boom. And that's how their stop losses with the heat and heat and heat. Because why? The bearish engulfing pattern was found on the wrong zone. This is a typical zone to be careful about, is it not? So why should I be seeing a bearish engulfing pattern on the support zone? It's an error. For me to get a good confirmation, I want to see a breakout. All right, I want to see a breakout, a retest. Then the bearish engulfing pattern should show here. Then I will say, okay, it's good to sell. I hope you guys understand the logic. Good. So here we can see, here we had a clear, good bullish engulfing pattern on a support area. And it's supported and it went. All right. So here was a typical error. So be careful. Be careful when you see your candlesticks. Make sure you're seeing them on the right market context. It's very crucial. I hope you guys are learning something tonight. All right. So you must observe the candlestick on the right location. Okay. So I've talked about that. Note. So if you have a perfect candlestick formation on a wrong direction, you might lose the trade. I've talked about that. So I'm just looking at my forex trading book for you guys. Okay.